Ladies and gentlemen, I welcome you all to the Q4 and FY23 post-earnings conference call of Brand Concepts Limited. Today from the management, we have with us Mr. Abhinav Kumar, Full-time Director and CEO. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements, and these forward-looking statements may involve risks and uncertainties. Also, this is a reminder that this call is being recorded. I would now request Abhinav to detail us about the performance highlights for the year that went by, the activities that happened during the year, and the plans and visions for the business in the coming year, post which we can open the floor for Q&A. Over to you, Abhinav.
Thanks, Vinay. A very, very good morning to everyone, and heartfelt thanks for joining the call. Yes, I think the year gone by has been great. I'm not getting into about introduction or what we exactly do, because I think most of you guys have been following the company for a long time now. And hence I'll straight away get into our performance highlights. So I think last year has been extremely good for us. We've grown. I think the year-on-year revenue has grown by almost 90%. And EBITDA levels, PAT levels, PBT levels, I think the presentation makes it clear. We've grown multifolds in most of those levels. But one thing that I would really like to sort of highlight here is that the last year has been amazing for us from another aspect, that every single channel of ours, whether it is online, whether it is offline, and when I say in offline, right from large format stores, department stores, to our own stores, to the entire dealer distribution network, we have seen amazing growth in all the channels. So it is a very, very holistic sort of a growth which has increased our penetration in the market. It's not a one-off, an order which would have come and suddenly the revenues seem to be going high. It is a consistent growth. So that has really helped us in sort of expanding our horizons. In terms of profitability, I think both sales as well as profitability, we've been able to beat our own estimates of whatever guidance that we had given. I think we've done far better than that. And thanks to the entire team, also at Brand Concepts. We've also, last year also has been significant in terms of, I had said that we'll be taking on more brands. So we signed up 2 new brands over there. One is United Colors of Benetton, and the other is Aeropostale. UCB for us is going to be definitely a heavyweight brand, whereas Aeropostale is a lightweight brand. So that's also a very, very good, healthy addition to our kitty of brands. In terms of supply chain, we've done a lot of work, cutting our dependence from China and going more local in terms of our sourcings, developing factories over here. So that also has worked out well for us. And so I think work has happened in every department. All of these, the seeds of all of this were sown during the COVID period itself. And hence, I think post the COVID period, when the markets bounced back, we were able to capitalize on that entire opportunity. So yes, the results are there. I think we'll spend more time for the Q&A, because that always takes a little more time. So I think we'll open it for the Q&A session, Vinay.
Sure, Abhinav. As usual, anyone who wishes to ask a question may use the option of raise hand. Swapnil, you can go ahead.
Sir, am I audible?
Yes, you are, sir.
Sir, so my first question was with respect to the EBITDA margins. So because we have signed two brands, one heavyweight and one lightweight.
Right.
So can you just give some guidance with respect to these two brands and how EBITDA margins would shape up in coming 2 to 3 years down the line?
In terms of our EBITDA margins or PAT margins, I have always maintained that we would be aiming for a high growth, like a 30% CAGR kind of a growth, even for the next 3 to 5 years. And we aim to become a 500 crore company in the next 4 years or so. And whenever you go for a high growth, generally it is seen that EBITDA margins or PAT margins take a little bit of a beating. However, the guidance that I would want to give and what we follow internally also is that we don't want to compromise on our EBITDA margins or the PAT margins, and hence we will sustain these levels even with this high growth. I hope I have answered your.
Yes, sir. Just a follow-up on that. I guess in the previous calls, you have commented on the fact that we would be growing on quarter basis. So, is it wrong to assume that Q1Q basis growing would be a bit difficult for our company because of the seasonality factor?
Yes. So I had said this in Q1, and I had meant it for the next couple of quarters. And hence, if you see, from Q1 to Q2, Q2 to Q3, we did grow. But there are obviously seasonality definitely makes a difference. And I was asked this question in Q1 that generally VIP Safari, whom people compare us with, that their Q1 is the highest and then Q2 dips. Where I had said that no, we will keep growing in Q2 and Q3 as well. We will grow quarter on quarter. But if you look at a broader horizon, at a longer horizon, seasonality will definitely play a role. Q4 has traditionally always been the weakest for most of the retail companies, right? 2-3 factors for that. January, February is your end of season sale, so hence there is a effect of the EOSS and markdowns and everything. The second is, even the traditional trade, March may generally, your people avoid taking all those billings and everything. They don't want to stack up on the inventory. So seasonality March is a bad month for retail, So hence seasonality will always be there.
So last question, if I may ask, with respect to the guidance which you have given on 30% growth, offline growth. So the same guidance we were giving since past 2-3 quarters. So do you think you can revise the guidance because now that we have signed two brands, one heavyweight and one lightweight? So are we being very conservative with respect to the guidance?
Well, it's always better to deliver more than you talk, no?
Yes, sir, absolutely.
That's the reason I'm at least smiling today, because I had given a lower. I had said that we so we've overachieved, and I hope that we overachieve every year.
Thank you, sir. All the best for the amazing performance.
Thank you, Swapnil.
Thanks, Swapnil. We'll take the next question from Saptarishi.
Yeah, thank you for the opportunity, sir, and congratulations on a great set of results. I would like to more understand on the UCP tie-up part in terms of like how much time it took us to like tie up with UCP, and therefore what all things that they have checked for us, so that like it gives us as an outsider as a confidence that it will be a continuous journey that we can tie up with more 1 or 2 other heavyweight brands.
So see, tying up with any heavyweight brand obviously is a long process because that's the most difficult part, right? After that, everything is a smooth walk. It is just like अरेंज मैरिज में शादी करने जब आप जाते हो तो जितनी मशक्कत लगती है ना, वो पूरी मशक्कत लगती है. वो लड़की वाले लड़के का पूरा बैकग्राउंड चेक, खानदान सब निकाल लेते हैं, और लड़के वाले लड़की का बैकग्राउंड चेक, खानदान पूरा निकाल लेते हैं. गुण मिलते हैं कि नहीं ये भी चेक किया जाता है, कितने गुण मिल रहे हैं. So all sorts of background checks happen, right from the design capability to the marketing capability to supply chain capabilities. Then a business plan is submitted, a product direction, a brand direction is submitted. Here it is very important that the licensor and the licensee both are aligned on what is the market positioning that you want to take for the brand. So, for example, a brand like Benetton, and if they come back and tell us that, oh, you know what, we want to be priced higher than Tommy in your category, it is not possible, right? It will be a lower price brand than Tommy Hilfiger because that's the market positioning. So, both them and us need to be very, very understanding, very clear on our positioning strategy. So all of this happens. It took us good, I think, 6 to 8 months almost to sort of get the alignment done, contracts executed. So yes, it takes time. Once it is done, and hence I say that, once this is done, it generally lasts for a very long time because you don't want to go through all of this. You don't, if it ain't broken, don't mend it. So, initial phase is long, but then the fruits of it is seen in the long term.
Understood, sir. Very well explained. And would also like to understand that you have mentioned in your PPT that UCB has, I think, around 250 plus stores in India.
Yeah.
So, who would be the other players, and is there any exclusivity in the region-wise license, or how does it play out actually across the players?
Sir, all the contracts that we sign, we make sure that somehow or the other it's an exclusive contract. So it will be very, very similar like Tommy. For all the three categories, small leather goods, women handbags and travel gear, whatever you will see wherever in entire India, whether it is Shoppers Stop, whether it is Lifestyle, whether it is Myntra, whether it is Amazon, or whether it is Sadar Bazaar in Delhi, if it is not a fake, it will be through us, whether it is their own stores. So we are the exclusive partners.
Sorry, exclusive for for the regions you will operate, or how exclusivity, or is it like exclusivity to some online platforms? How is that exclusivity plays out?
No, exclusivity for entire India, all channels.
So the stores that they would operate, except from us, is their own stores. Like they themselves would operate. There will not be any other players like us.
No, I didn't get that.
So my question is basically, Brand Concepts is one very formidable player who has tied up with this kind of brands, and therefore in future we will be having maybe stores exclusive to UCB also, possibly, or maybe we'll have UCB products in our backline stores. My question is that, is there any other player in India who also has tied up with UCB, so that they can also retail and sell the products of UCB? And is that therefore region-wise exclusivity?
Okay. So I think, Saptarshi, I'll just take a minute and explain the process of licensing once more. Then we'll be a little more clear. See, we operate in three categories: travel gear, small leather goods, and women handbags, which in general is known as travel bags and accessories category. Okay. Now, for these categories, we take a license of a brand. When I say license, it is not only distribution. We design, develop, manufacture, and retail. We control end to end, start to finish, the entire value chain. Okay. whatever revenue that we generate, there is a certain royalty which goes to the brand on the sales that we do. Right? There is a certain percentage of royalty which goes to the brand for using their brand name. Right? So for our product categories, we are the exclusive licensee. So whether it is UCB store, even if that store is selling belt wallet tomorrow, they'll be sourcing it through us. If they're selling a backpack or a luggage or a women's handbag, they'll be sourcing it through us. We are free to open a UCB travel gear exclusive store also. We will not be opening UCB apparel stores. We are not into apparel. So we are a very similar company like how an Arvind or an ABFRL is. They are into apparel. We are into bags and accessories. We are exactly like Titan. So Titan Industries has its watch stores, right? Titan Industries also has licensed brands. So Tommy Hilfiger is a licensee. So Titan is a licensee for Tommy Hilfiger watches, right? So we are, if now I hope you understand the whole.
Yes, got it.
Right?
Very well.
UCB has other licenses also. Timex has the license for watches.
Okay, last question and then I'll fall back in the queue. Is that if you can give the store economics for your existing 30 stores. So like what would be like average sales per store and therefore expenses, and therefore what would be payback period for store?
See, we are hitting in the metros, if you will see, in the metros we are hitting an SSPD of almost between 85 to 90. SSPD meaning sales per square foot per day. We hit, in certain cases, we hit more than 100 also. But मैं पूरे average की अगर बात करूँ तो we hit about 85, 88 की SSPD, which is considered a very, very healthy SSPD. So you can imagine 85 into 30. So you'll be doing about 2600, 2700 rupees per square foot per month. Right. So if it is a 500 square feet store, with a 2500, 26, 2700, this thing, it will roughly translate to about 13 to 15 lakh rupees of sales per month from a tier one metro kind of a city. And in the tier 2, we hit about between 65 to 70% of these numbers. That's the rough estimate of our sales, what we are able to achieve.
And what would be the OPEX and CAPEX for this store?
So roughly how it translates is it will be different for a franchisee store versus a company-owned store. But net अगर आप देखेंगे तो any store at the retail value, we make about between 10 to 15% roughly of contribution. So your best stores can go up to a 20-25% kind of a contribution as well. So if you're doing a crore rupees of sales, your best stores could land up giving you a 20 lakh rupees of contribution, and the tier 2 kind of stores would give you about say a 10-12% kind of a contribution.
Understood. And this is and that capex level, what would be the average capex and what capital?
Also, we keep our capex quite low. So for a franchisee to open our store, 40 लाख रुपए के इन्वेस्टमेंट में 40 से 50 लाख रुपए के इन्वेस्टमेंट में हमारा स्टोर तैयार हो जाता है. पहले तो 30 से 40 लाख रुपए में ही हो जाता था. Now we are increasing the store size, considering that we are getting more brands. So hence we are increasing the store size. Thankfully, we are also now in the list of so all the top malls when it comes to the bags and the premium bags multi-brand category. We are now a default partner with them in all their new projects. So we are getting more and more premium retail counters for us, and hence the capex also is increasing a little bit. But from 30-40, it would have gone to, 40 to 50 lakh rupees for a store. And when I say 40 to 50 lakh rupees for a store, for a franchisee, it not only includes capex, it includes your, the stock investment. It includes the rent deposit that you have to pay to the mall. So that's the total investment which goes to the store. And hence, the franchisee is easily able to make anywhere between 15% to 20% kind of an ROI. Capex अगर आप मेरे से पूछेंगे तो we do about it roughly translates to about 3,000 rupees per square foot.
Understood, sir. Very helpful, and I'll fall back in the queue. Thank you so much.
Thanks, Saptarshi. We'll take the next question from Ankur. Ankur, you can unmute and ask your question.
Yeah, hello. Thank you for taking my questions.
Yes.
I have first question is on the product mix. Can you please explain bag is what percentage, travel gear is what percentage, and other things are what percentage?
Right. So if you see this year, our percentages have been, so small leather goods continues to be our largest sort of portfolio, and it contributed to almost about 51%, 52% of our overall sales, whereas travel gear has contributed to about roughly about 46% kind of sales mix, and the rest is your women handbags and everything.
Got it. And sir, then on margin side,
that is also because if you see women handbags till today, we don't have, so we just have our own private label, which is Sugar Rush. We don't have a brand. We used to have and Global Desi, which we let go 2 years back. So with UCB handbags and all coming now, this segment is gonna, the percentage contribution is gonna increase. Yes.
Got it, sir. And second question is on the margin side. So if I look at QOQ, there is a drop of margin. But if I look at Safari as well as VIP, both had margin expansion, and they are saying that raw material cost has come down, so margin has improved. But yes, it hasn't happened in our case. So can you explain that, please?
If you will see our gross margins, our GP percentage has actually gone up, right? But see how we calculate, Ankur, in our this thing is we calculate something known as a contribution, right? Which is after your variable expenses, which are royalty and selling distribution for us. After those expenses, we calculate something known as a contribution. So if you will see our gross margins, our contribution our gross profitability is higher, but our contribution has gone down a little bit. The selling distribution expenses have increased also because of our own marketplace activities have started to increase. We have seen a very, very healthy growth in our marketplace activities, and hence the selling distribution expenses have gone up a little bit. Because in the marketplace activities, you are dispatching goods in eaches to all your various customers online rather than in truckloads, and hence there is a slight increase on that perspective. But now, if I have to say that, for example, if we make somewhere around, अगर आप देखोगे कि if we make, for example, somewhere around a 25-30% kind of a contribution, right? After the contribution, you have your fixed OPEX, and you come down to your EBITDA levels. So, if the sales is down by say 3-4 crores, you would have lost almost 1 crore rupees approximately in terms of contribution. Your fixed OPEX being the same, and hence you see a slight impact on the EBITDA margins. But otherwise, from a gross margin perspective, yes, we have an increase in the gross margins.
Got it. And on the next question is on the two brands that we have added. What is our expectation in terms of revenue for this year from those two brands?
See, the brand launches, we are assuming that we will see the brand launches happening basically in Q3, right? and hence they'll have a revenue impact of about 6 months, 5 to 6 months. We expecting that we'll be able to launch it before Diwali. Anything before than that is a welcome, healthy welcome. But yes, Q3 से उसका impact देखना शुरू होगा. So let me put it in this way that we expect that the current business in itself will grow by say 20% and 10%, 22%. The rest 8% further is going to come from these two brands.
Got it. And sir, we, as in you also discussed about it earlier, we are in this range 40 to 45 crore revenue for last 3 quarters. So can we expect material jump from the Q1, because Q1 is generally a strong quarter if I look at VIP and Safari?
Yes, so I can safely say that April has been a good month for us. May is also going strong. So let's see. I'll not be able to probably comment on the quarter figures, but yes, as I said, that we are very, very confident of delivering more than 30% kind of a growth this year, which we should be able to achieve.
Got it. Thank you and all the best.
Thanks, Ankur.
Thanks, Ankur. We'll take the next question from Rizwan. Rizwan, you can unmute.
Hi, good morning, Abhinav. How are you?
Hi.
And really, thanks to you and the team for having such good numbers and executing it so in a very wow way. Thanks to you and the team on the ground as well. Abhinav, my first question is on the brands UCB and Aeropostale. To understand what is basically, as I remember, we have taken this license agreement few months back, UCB in the last quarter and Aeropostale before that. So as the revenue are going to come in Q3, so what's the cycle after the agreement alignment? What's the cycle, just to understand and how it goes here? So we have an understanding in future also for the brands which are coming in.
So whenever you sign a brand, see all the work, we start the work on the product development only post the agreement is signed, right? Because it involves a lot of resources, efforts in developing the entire product. So hence we wait till the time we've signed the agreement. So once the formal agreement is signed, we start the product development. Typically, if you will see, you take about 45 to 60 days, or at least say roughly 45 days, 1.5 months for the design deck to be ready for the first launch. It's shown to the brand, they discuss approval, non-approvals, all of that happens. Then we get into sampling, because it is the first time that you're making the samples. Every small little thing, there'll be a mold opening. So एक logo भी अगर करना है तो उसका एक mold खुलता है, puller भी लगाना है तो एक mold खुलेगा. So this typically takes a little longer for the first time. And then once the samples are approved, then you get into production. So net, if you will see, this is a 7 to 9 month kind of a process, ideally, before once you sign, and from there to product hitting the retail shelf. It's about 7 to 9 months, depending on how the entire progression has gone.
So currently, will the UCB or the Aeropostale brands will hit the stores earlier? Which one is on a better stage than the other?
So, so UCB, I think, no, I think Aeropostale would be the first one to hit. And see, as I said, by now, I think it would have been evident. I always, I don't go boasting about a lot of things, but hopefully, Aeropostale का कुछ शायद से Q2 में ही आ जाएगा. We'll start seeing some effect in Q2 itself. But I still have my fingers crossed till the time we see the final pre-production sample. If everything is fine, gone ahead. So we've already proceeded with certain orders in Aeropostale, and we'll start seeing something hopefully in Q2 itself. So Aeropostale will hit first and then followed by UCB.
Any other new brands coming during the calendar year or the fiscal year? Is there?
It is my wish list, Rizwan, that I sign at least 2 more brands within this year.
Okay.
Financial years.
Okay. Another one, we were looking for store expansions in the next 2-3 years, and
yes,
as I remember, it is around 15 to 18 stores this year, if I remember it correctly.
Yes. Ideally, I would like to hit the 50 store mark by the end of this year, but still we've taken a guidance of about 15 to 18 stores. By March end, or the investor presentation is containing 30 stores. As we speak, we are already 33 stores. We've opened 3 stores within the past 1.5 months. So we are opening stores. So hopefully we'll be anywhere between 45 to 50 stores by the end of this year.
Another question, Abhinav, is regarding as we are expanding, we are bringing in the new brands. So isn't it that our efficiency will improve? So the EBITDA and PAT should improve other than being at the same level, because we will be utilizing our, say, all the resources for the store resources, the staff resources, and etc.
See, by now, I think whoever has been tracking the company and or interacting with me, by now you would have understood that I'm a very so we have a very, very strong financial management system in place, right? And for me, the bottom line, in fact, I should say, I tell my team also that the formula for profit for me is profit is equal to cash surplus, so we are very, very financially prudent. If you will see our debtor management, our the cycle management has gone far better, right? Even vis-a-vis the competition, or if you track the competition when they were at our size, they were not even breaking even. They were probably making losses or just about breaking even. Whereas we delivering more than 6% of PAT, right? There is some effect of DTL, DTA also, which is impacted. So, if you talk about more from the PBT perspective, yes, we are, or EBITDA perspective, we are delivering about 13% of EBITDA, right? With the high growth, we'll be expanding into a lot of sectors. We'll be putting in a lot of, this year we've allocated a good amount of budget towards marketing. We are looking at signing a few, probably for Bagline, our e-commerce platform also, and our stores also. We're looking at putting some money behind those activities, looking at celebrity tie-ups, all of that, right, which will fuel this entire growth. Also, when you sign up a new brand, initially for 2 to 3 seasons, it takes a little time for that brand to settle down. So considering all of this, chasing a high growth, and I would want to beat my own guidance of 30%. So considering all of this, my guidance would be that I will do all of this still keeping the financials intact, the health intact. We've gone very, very strong. If I talk about from debtors of 108 days last year, now we are at 61 days. Stock, while the stock levels have, in terms of actual cost, if you will see, it has increased obviously to fuel the demand. But from number of days, if you'll see, from 176, we've come down to 132. Our creditors from 110 days, actually we've reduced them to 67 days. So hence our suppliers are very, very happy working with us. our current ratios improved from, we're at a 1.39 kind of a current ratio. Debt equity ratio is 0.9. Working capital rotation is 3.86, right? So all of this is, so we have a very keen eye on our bottom line, on our financials. So hence, we will not compromise on that, but yes, as a guidance, I would like to give that we will maintain these levels going forward.
If I may ask one more question regarding the stores opening, as we discussed during the last calls, that there would be some funding required to finance this. It will be served by internal and through QIP. So is there any thought process now or development on this from your side?
See, yes, I had mentioned that, and it is still in contemplation. But as I said, that we're very, very prudent with any money that we take and spend here. So, agar paise ki zarurat nahi hoti, if we are able to generate on our own, why to raise? So we are still contemplating. Depending on, yes, there will be certain investments this year which will be towards manufacturing. So we are getting into manufacturing. We are getting into, we're getting into a hard luggage manufacturing facility of our own. We've got the land allocated already. We are in the process of talking to various equipment suppliers in negotiations of that, creating the factory layout and everything. So that would be definitely an investment. And hence, considering all of this, once, and it will be pretty soon, in the next week or 10 days, I think we should have our final answer. And according to that, if we require, we will be going ahead with raising certain amount.
So this gives one more question. Please allow me to continue with this question. If we have this, if overseas as the same promoter, and so are we not thinking to utilize this as a merger and instead of going for a plant development or a factory development?
No, so we are looking at merging both the companies. The final decision has also come, and the decision is that we would merge both the companies. So we would be starting the process pretty soon, but you will not see any impact in this year because the effective merger date would be 1st of April 2024. Because it will take that much of time. And only because of this merger and getting the entire know-how of manufacturing or the entire team of manufacturing in-house is when we've been able to take this decision of moving ahead with a hard luggage manufacturing plant. So all of this would come under that team. We already have a very, very experienced team which handles manufacturing. So yes, so the plans for mergers is on.
Great. Thank you so much, Abhinav, and again, pleasure speaking with you.
Thank you. Thank you, Rizwan.
Thanks, Rizwan. We'll take the next question from Jatinder Agarwal.
Yeah, hi. Good afternoon.
Good afternoon.
I have only a few questions, and they are all related to the industry actually. Right? So we understand that the travel gear market is about 10,000 odd crores, right?
No, sir.
The luggage.
Higher.
Sorry?
It's much higher.
Exactly. So the question that I have for you is, so you have 3 brands today, Tommy Hilfiger, UCB, and Aeropostale. What is the size of the market that you're catering for each of these brands?
So if I see all the 3 categories that we are available in, which is travel gear, small leather goods, and women handbags, which again, as I said, is known as the travel bags and accessories market. Pre-COVID, according to a Euromonitor report, it was somewhere around close to 24,000 crores.
Okay.
There was a recent Economic Times report which pegged this market to somewhere close to 50,000 crores, right? Now, we'll have to check the latest Euromonitor to see what the market size exactly is. It's a huge market. So the point being, whether it is 25,000 crores or whether it is 50,000 crores, it is a huge, huge market. Now, the beauty of this is that the organized market is about 5 to 6,000 crores.
Right.
Right. Rest, everything is unorganized.
Exactly.
What it speaks is the potential of this market for the next 15 years also is going to be amazing, right? Because you can't have such a large unorganized. It has to, everything will eventually start getting more organized, correct? So, catering to that kind of a market from individual brands perspective, also, if you talk about whether even if it will be a luxury segment, which is, top of the pyramid.
Right.
So, LV does a business of some 400 crores in India from 4 stores. So, there's no dearth of market size. It's just that how well the market, how soon the market gets more and more organized, more retail doors open, more malls open. Yeah.
No, my question is exactly. So if the organized, at least the travel gear is 5,000, 6,000, which is the total organized market, right? And obviously you're competing in this organized segment, right? With all these 3 brands.
Yes.
Right. So TH in this 5,000-6,000 crores of travel gear is positioned in which? Is it in the 500-600 market, or is it like a 1,000 crore market where TH can look to gain market share?
No, so TH would be in that. So now I get your question. So very good question. Yes, so TH would be in that 500-700 crore market.
Okay, perfect.
UCB would be in that larger pie, which is at least, I think, 2,500 crores, which is the mass premium category, about 2,000.
Medium category, okay.
Yeah. And the mass is another, so 3,000 crores, more than 50%, 60% is mass, where right now we don't have a brand offering.
So Aeropostal and UCB will be positioned in this 2,000, 2,500.
Yes.
Perfect. And my second question is again very similar to this question in the small leather goods segment. Perfect. So can we have the same breakup for TH and UCB Aeropostal?
Yes. So sadly, Jatinder, for small leather goods, there is no such syndicated study. So I can comment more from a overall market perspective, because see, leather industry in India is huge, right? But it also captures manufacturing, which is the biggest segment. A lot of exports happen. So there's no syndicated study to say, and generally they club it with the handbags, so it becomes bags and accessories. But if you see Tommy Hilfiger in terms of small leather goods, we are market leaders in all the channels that we operate in. So whether it is Shopper Stop, whether it is Lifestyle, we are the number 1 brand. And we are positioned as a premium brand.
Right.
So there we are, as it is, market leaders. The second level is your mass premium, where you have players like Titan has entered into that segment. Louis Philippe is obviously into that segment. A lot of these brands are there into that segment, and hence UCB comes more at that price point, that price segment. So again, I would say the overall market size is again very is quite big, but not like मतलब अगर मैं organized भी बोलूं तो I think it would be I wouldn't want to actually say because syndicated study nahi hai. So commenting on the exact figure, whether it is 500 crores, whether it is 1000 crores, it's a little difficult.
Okay. Perfect. And so the next question is actually related to your, what are your thoughts in terms of exactly numbers in terms of like 100 crore revenue in 4 years. But in terms of the business strategy, how do we see this business, say 3 years, 5 years down the line?
See, from a business strategy point of view, if you will see, मैं generally अपने आप को, I like to say this that we are very much like Titan Industries, and the reason I say this is because till late 90s, watches was just a timekeeping device. I think I've mentioned this example time and again. It was just a timekeeping device, and the son used to get a worn HMT from his dad. That used to be watches, right? And then Titan enters, brings in new brands, goes ahead, brings in certain international brands, takes licenses, opens multi-brand outlets, and watches becomes a fashion accessory rather than just a timekeeping device. And similar is what I expect our industry, these bags and accessories market to become. It cannot be a play of just 2 or 3 brands. There'll be multiple brands. If you see West, if you go to the US, you go to Europe, at every price point, even in travel gear, you will have a lot of brands, a lot of fashion brands doing luggage, travel gear. People want to, we Indians, we are getting more and more fashion conscious. We want to, the aspiration levels in the country are rising, income levels are rising. We're talking about an $8 trillion economy. All of this is going to give more money in the hands of consumers. And so if I may ask you, Jatinder, what's your age?
I'm like 48.
All right. So probably you would have already seen the life. You've made a lot of money and everything. But if you ask your son, if he's traveling, if he's going abroad, for example, for studies, and if you ask your son that what bag would you want to buy? You're getting a Tommy Hilfiger for 10,000 rupees and you're getting a VIP or an American Tourister for 7,000 rupees. What will his choice be?
Got it.
So you now break it down even to the masses, to the student category. The guy has to carry a backpack to his college, to his school. Would he want to carry a traditional old luggage brand?
Okay.
Or would he want to carry a fashion brand?
Got
right?
it.
He would want to carry a fashion brand or a sports brand. He'll carry a Nike, he'll carry a Adidas or
Hello.
Okay, the price point is very different. Aapko, you get your regular this thing for $1,000, $1,200. A Tommy, you will get it for some $3,000. So the switch is very difficult. But with a Benetton, the switch becomes easy. So we will continue to grow. We will become a house of brands, and we will continue to operate in the fashion space even 5 years down the line. So from 500 crores, we'll be looking at a 2,000 crore, but the premise will not change.
Perfect. And my last question is more related to, again, the thought process behind building the business, right? So what we understand from companies that are standalone into travel gear and luggage is that the USP is both handling the brand and the manufacturing, right? So you control the full value chain, and eventually that works very well. Would you differ from that over a period of time? Would you then look to launch your own brands and make it really material, or just stay with outsourced brands?
No, we will launch our own brand as well. And I've said this earlier also that I feel there is but you know, the own brand also does not only come from if a company thinks that, oh, you know what, we need to have our own brand. That's not the right strategy. So for the namesake of coming with our own brand, we want to launch the brand. No. If there is a gap that we are able to identify in the market, that yes, there is a gap where this brand can sit, or we can cater to this gap in the consumers, for the consumers, with a particular brand offering, why not? We would want to do that. But as I said, it's not that I've always said that we are always going to be a house of brands. We'll have our focus always on licensing. We will have multiple brands. We will not be a single brand player. So, hence, and another aspect that जो मैं हमेशा बोलता हूँ कि यार, you know, I love to experiment, but I will never bet my shirt on over an experiment, right? So we are financially very, very prudent, and hence burning and building a brand is something that just doesn't,
philosophically.
Yeah, philosophically, I never believed in that you burn and build. So we're not in that game.
Perfect. I think that is very helpful. Thank you. Thanks a lot.
Thanks, Jitendra.
Thanks, Jitendra. We'll take the next question from Krishna. Krishna Bahirwani, you can unmute and ask your question.
Hi, Abhinav. So I wanted to get a sense on what your sourcing is going to be like both next financial year and the financial year after that. You had spoken last time a little bit about getting into the hard luggage manufacturing. Now you've spoken a little bit about the merger. You had also spoken about reducing your dependency on China, bringing it down somewhere close to 5 to 10%. So I wanted to understand how the sourcing is going to look going forward.
Yeah, so if you will see, we are on the same path as I had mentioned earlier. We continue to work with certain Indian suppliers very, very closely for developing the local strength, so that our dependence from China comes down. However, yes, China still is there. I had spoken about that. Yes, we are contemplating about our own manufacturing, and today I've confirmed that yes, we are going ahead. We have the land allocated. We are going ahead, setting up the hard luggage manufacturing. We are merging the company. So I think we are in line on what I've been saying, and hopefully we've seen a lot of changes also happening in India when it comes to luggage and travel gear manufacturing. A lot of component manufacturing is getting set up, and it feels very good to see that we are coming of age. Nasik has developed as a proper hub in all of this. So now the wheels, trolleys, everything is getting developed in India, and hence this is the right time to sort of enter into the manufacturing, because manufacturing entails two broad things. One is obviously the know-how and how you make the bags. But more importantly, in making a bag, unlike a shirt where the components are less, in a bag there are multiple components. एक bag में कुछ 36 components जाते हैं, right? From trolley to zippers to pullers to rivets to this to that. And India was a little weak when it came to component manufacturing, and hence a lot of people were dependent on importing the components. But touch wood, now we're seeing a very, very healthy change over there, and hence it's the right time for us to enter this.
I also wanted to understand from this going into manufacturing, which area do you feel like this is going to benefit us the most? Is this going to benefit us more in terms of quality control? Is it going to benefit us more in design and product differentiation, or supply chain security, or costing, or a mix of all of them?
Actually, all four of them. So for sure, bringing it in-house, once the plant is completely running up and well, it is going to give a boost to our EBITDA margins, because the margin that you were leaving with the manufacturer, with the third-party manufacturer, obviously you're capturing those margins. So it's going to bring goodness in terms of margins. It gives us a leeway to designs, to development, differentiating the product. We'll be able to control. So no matter how many NDAs you sign with various different factories, with fashion brands, होता ही यही है कि हमारी designs copy होने लगती हैं. So coming from our own, once we start having our own, this thing is going to benefit over there in product differentiation. And of course, our quality control is going to get better, right from the process of inline to pre-production to post-production, everything. So in fact, this is a year where we are also setting up a new department in our organization, which is known as the Quality Assurance Department. So while we already had quality control, but now we're taking it one step further, and we're creating like a quality assurance department where from, again, as I said, from end to end, so from raw material to production to post-production QC to customer service, all of this entire thing will come under this one department, which is a quality assurance department. We've started international warranty on our bags. You might ask that how can you give international warranty if you don't have stores internationally? So we figured out a very, very simple way, and international warranty अगर मेरे उधर पे stores भी होते और मैं अगर वो warranty देता, I think it would have been farce, because आपका अगर बैग उधर टूट गया है for whatever reasons, आप उधर स्टोर ढूंढते नहीं बैठोगे कि यार अब टॉमी का स्टोर या whatever XYZ ब्रांड, इस ब्रांड का स्टोर कहाँ है, ये उस मॉल में, मैं उस मॉल में जाके अपनी वो कराऊंगा. So we have come up with a very simple QR code based quality international warranty. You just scan the QR code on the bag, it'll take you to the quality page, quality assurance page, and we immediately, you just upload the picture of your broken bag and we credit you $100 immediately. Please go ahead, find whatever next store that you see, buy a bag, give us the bill, we'll reimburse that to you up to $100. So you have a very stress-free travel. So these are certain aspects which lot of these small little aspects is what differentiates a brand from a basic product. So we're working on all levels, right? From improving the product quality to giving a quality assurance also to our consumers.
That's amazing. I'm really, really glad to hear, and looking forward to one by one replacing all my pieces of luggage with Tommy luggage. I also wanted to ask you about brand positioning, because you've done a good job of like explaining it in the presentation about how these brands are normally positioned. But I also want to understand, in the mind of the consumer who may know, these three are brands, but they may not know that, Tommy is a much higher brand. You may figure that out looking at the price. But how are you communicating this, to the customer? And second, when you target brands going forward, you said you're targeting 2 brands this financial year. What segment of the market are they going to be in? Are they going to be with Tommy, or are they going to be closer to UCB and Benetton?
So, okay. So answering your first question, see, somebody who's not aware about Tommy Hilfiger's positioning, to be honest, no offense to that person, but he's probably not my target audience. See, fashion, I keep saying this always, it's a one-way street, Krishna. So if you wear Peter England, when your income will grow, you'll move to a Louis Philippe, an Alan Solly. From Alan Solly, you'll go to a Louis Philippe. From Louis Philippe, you'll move to a Tommy Hilfiger. From Tommy, you'll move to a Hugo Boss. Until you've really done so bad of spoiling your entire wealth, you will never go back, right? So it's the aspirations which keep rising. So today, people who aspire to wear a Tommy Hilfiger are the people who are my target audience. Now, a person who is a Peter England guy, I'm sorry to say this, but the brand is an exclusive brand. It's not an inclusive brand, right? So hence, that person is not my target audience, right? When it comes to a brand like Benetton, these brands are more inclusive brands rather than being exclusive brand. So a Benetton price point will always be a more affordable price point. So I hope I've answered your first question. Now, moving on to the second question on the 2 brands. Sorry. So you had also asked about communication. So communication, again, will go synonymous with the brand positioning and the brand strategy. So for Tommy Hilfiger kind of a brand, you don't need to paint the town red, right? These brands thrive on exclusivity. So we would be taking some celebrity route this year. But again, will we come up with a full-blown TV campaign? No, we will not, right? The brand doesn't require that. So it will be more digital medium. Yes, with a brand like Benetton, yes, we have the opportunity of going all out. But at the same time, we are a licensing company. We are not here, or I'm not here to build Tommy Hilfiger as a brand or build Benetton as a brand. Hello, why am I paying you royalty for? Your brand is already built, right? I need to build you in my categories. So my marketing spend will never be in the tune of कि मैं अपने revenue का 8%, 10% marketing में खर्च कर दे रहा हूँ. It will never be that, right? So I hope I have answered your question. On the brand that we want to take, I really want to take one brand in the bridge to luxury segment. Whether we get it or not is another question. But I would love to have a brand in the bridge to luxury segment, which goes a little higher than Tommy. Why? Because volumes might not be initially very great, but I think India is now the right time. We poised for the bridge to luxury and the luxury segment exploding in the next 5 years. So I want to be on that wave now. 5 years back, if somebody would have asked me, I would have said that, no, I'm not going to touch that. I'm going to stop at premium. But now I'm pretty confident, I can say this with utmost confidence that India is now ready for these brands. And hence I would love to have one brand in that bridge to luxury segment. The second brand again would be in that mass premium kind of a space, which we would want. It will just have a little different design sensibility, a little different pricing sensibility. It will be one notch further. What I would want is that it has to be one notch lower than UCB as well, in terms of price points, not in terms of brand perseverance, but from the price point perspective, one notch lower than UCB.
Great. Thank you so much.
Thanks, Krishna. We take the next question from Rupesh. Rupesh, you can unmute and ask your questions.
Hello, sir. Thank you. Thank you for the opportunity and congratulations on fantastic set of numbers. You can hear me, right?
Yes, absolutely.
Yeah. So I'm going to continue the last participant's question. So can you give me what were the ad spends in FY23? And maybe if you can split that into how much were on the licensed brands and how much was on the own brands.
So own brand, I don't think there was hardly any spend. Tags and some POSM kare honge, it would hardly be anything. But in terms of total marketing, we spent about 3 odd crores, 3.13 crores to be precise, on marketing.
And like you said, right? I mean, TH is already a brand, UCB is already a brand. So this number, can I expect it to remain in this kind of range, 1-2% kind of range?
Yeah, right now it is about 2 odd %. You can expect that we will put in some more money in terms of marketing going forward, but it's still gonna remain under 5%.
I mean, 5% seems like a large number, right, sir? Given when you are licensing the well-established brands. So I mean, can you please explain that?
So we are looking at putting in some bit of money towards Bagline, right, which is our own store format. And now Bagline is a multi-brand outlet. Incidentally, it will carry all of our brands. So it will be a dual prong strategy where you advertise or you put in money on Bagline. And in Bagline, we don't have a brand by Bagline, right? So what are we going to advertise in Bagline? We're going to advertise or we're going to market all of our brands in Bagline. So hence, that's where we're going to be deploying some funds for marketing. But even for next year, if I say, maximum I said that you can take it that it will be under 5%. But next year also our budget is going to be between 3 to 4%, not more than that.
Okay. And sir, I mean, can you indicate what would be the royalty we paid in FY23? I've been under contract or an NDA which is signed with all these brands. I'll not be able to give you the exact percentages of various brands, but in terms of the entire license fee that we had paid for the entire year, it was close to about 16-17 crores. Okay. 16-17 crore. Okay. And can you maybe split your sales between licensed brand and your brands?
So Tommy contributed to about 82-83% of our overall sales.
Okay, I see. And sir, this Tommy
and
figure.
Some further sales would have come from
जो भी डिसकंटिन्यूड ब्रांड्स थे जिनका जो भी कुछ बचा हुआ होगा एंड ग्लोबल देसी वगैरह का वो Q1 Q2 में कुछ उन सब की सेल्स आई होगी. नाउ आई डोंट थिंक वी आर लेफ्ट विद एनी फर्दर स्टॉक्स ऑफ दैट. So that would amount to be about another 2-3-4%.
Okay. And ये Tommy Hilfiger का renewal, I think deadline is December 23. So can you just maybe talk about where we are in that process?
We've closed all the negotiations and we've already received the contract. So
perfect.
Yeah.
Okay. And is there a significant change in royalty rates or is it similar to the past?
Let me say similar to the past. Won't be able to comment too much onto it. I think a lot of you guys went to Arvind because I think similar calls, and then I got a call here. Why are you divulging all the numbers? And I said okay. So
okay.
Yeah, but yes, our as I had mentioned earlier also, our partnership is strong. We've always been an integral part of their strategy, and it continues to show. So the draft agreement is already with us. Hopefully pretty soon. Once I sign, you will see the notification on the exchange.
Okay, I see. And sir, then now coming to two channels. So first is online. So what are our margins in, let's say, online versus offline? That is question number one.
Mm-hmm.
And if you can also give, split between Myntra and Amazon and maybe other players.
So margins, obviously, in terms of the e-commerce business, the margins are slightly better. So I would say, again, I'll take the example of that contribution grid जो मैं हमेशा बोलता हूँ. So almost the difference between online and offline would be in terms of it would be close to about 4 to 5%. In terms of contribution, where the contribution percentage is slightly better in online. Channel-wise sales, we've already sort of given in the entire investor presentation. But to answer your question on Myntra, yes, Myntra continues to be our largest partner. They are almost close to 40% of our online business, between 35 to 40% of our online business. And we continue to focus more on Myntra, primarily for the reason that they are the number one fashion platform in the country, as we versus Amazon and Flipkart, which are more horizontal platforms. We have now seen a very, very good traction coming on even Tata Click Luxury, Tata Click for that matter. Amazon also has been growing very, very steadily for us. So, yeah.
Okay.
I hope I've answered your question.
Yes, sir, definitely. So I don't understand e-commerce business all that well, but maybe can you talk about, what is our penetration kind of in these channels and how that penetration can grow? Are there some, low-hanging fruits, some, good tier 2 cities where probably we're not serving today, that'll grow some segments, maybe shipping times will reduce some. I don't understand this, but in general, how is our penetration and how will that grow?
So, e-commerce for us is, so internally we again classify it in B2B and B2C. So a B2B is where I bill to a Myntra or I bill to an Amazon, and then Myntra bills it or Amazon bills it to the end consumer. A B2C is operating our own marketplace. So during COVID, we sowed these seeds where we started developing our own marketplace operation. And today I'm actually very, very happy to share this, that of our overall revenue, almost 16-17% of our overall sales this year has come from the marketplace, which gives us a much better control over, the entire product, the discounting and everything.
This is Bagline, sir?
No. So Bagline is separate. Bagline also, touchwood, has started throwing up good numbers. And this year we're gonna put a little thrust on our baglineindia.com as well. We've already started touching about 13-15 lakh rupees monthly sales. So it's equivalent to a tier 1 EBO, right? So touchwood, again, we are profitable there because we've not spent too much money on that. But not Bagline. The marketplace that I was talking about is, so we have a seller flex of Myntra in our own warehouse. We have a seller flex of Amazon in our own warehouse, Flipkart, all of these places. So we directly sell from these platforms, from our mother warehouse, Indore, to the end consumer directly, right? Through these platforms.
Okay.
So my go-to market time is very less. The moment I have a stock in my warehouse, it goes online. B, I get this customer data, right? Servicing directly to these end consumers. C, my margin intake is a little better, even than B2B. D, my entire inventory goes live. So, it is a much better effective utilization of the inventory. So this sales has been increasing. And hence, in one of the questions I had answered that my selling distribution costs have gone up a little bit, is because of these sales. It has gone up a little bit, but our overall margin intake also on these sales are better. So this has been increasing very good for us. Almost close to 30% of overall online sales, more than 30% is now coming from this. So next year, in fact, I believe that we've taken a much higher target from our own marketplace sales, and we'll see this percentage growing.
But I mean, you still, can you maybe talk about penetration and any low hanging fruits? How, I mean, maybe you can define penetration. Maybe I don't know how to define it.
So our penetration and low hanging fruit, if you'll talk about, will come from, if everything goes well, touchwood, will come from, something like a brand like Aeropostale. It's an online first brand. Currently, even in online, we are not able to cater to a lot of lower price segments. We are not present in those lower price segments with brands. So with UCB and Aeropostale, the moment we enter that lower price segment, today Tommy is premium. Bahut baar, in fact, we've discontinued a few channels, and big channels. I would not like to take their names because they have done over discounting. So we've stopped supplies. Had I supplied and everything, agar main sab kuch khol do, to shayad se the revenue would have been even higher. But this is where we protect the brand for a long term. If you start milking the brand today, either you will lose the license because the licensor will say that, what are you doing? You're taking my brand to the dogs. Or the brand will become passe, it will become a discounted brand. So hence we do a lot of control. So वो lower price point नहीं खेल पाता हूँ. With these new brands coming in, we enter the lower price point segment, and that should unlock a lot of value for us.
Okay, but at contribution level, these lower brands will still be okay? Similar to company average?
No, contribution from these brands will obviously be lower. They will not have a higher contribution as Tommy Hilfiger. But as I said, EBITDA margins are gonna remain same because even at a lower contribution, you don't have all the same expenses. You're not gonna double up your expenses in proportion to these brand sales, right? So while the contribution or the gross margin would be lower, let's talk from the gross margin perspective. The gross margin would be lower, but that's where I feel that EBITDA levels are gonna remain more or less in the same region.
Yeah, I was asking about contribution margin only, sir. I got my answer. And then, sir, I am looking at slide 8 of your presentation, and you have, 38 8-hour stores and 22 franchise operated stores, so 30 stores. And the sales between these two is roughly only 10%, which is 16-17 crore. That number, sounds low to me. And even if you take this 30 to 50, I'm not able to understand the impact of taking that 30 to 50. So maybe if you can explain that.
Yeah. So if you see 20, bulk of the stores out of 30 stores, if 8 are only company owned, it means it's less than 30% of the stores. So more than 70% of the store is franchisee owned, franchisee operated, where the revenue capturing happens at my billing, right? Which is at the wholesale. So, and there is a franchisee margin plus GST. So retail is almost double or probably slightly higher. It's almost double of the wholesale. So if you see 10-12% contribution coming, so 16-18 crores of sales, uska agar main franchisee stores ka nikalunga. So I think the franchisee stores will be doing almost 12 crores, 13 crores into 2 kar do agar aap. So that's the retail sales. So from 22 stores, if we are able to generate 24 crores of sales, if the average, on an average, one store is more than 1 crore, right? And these stores are, sir, 300, 400 square feet stores. So from the SSPD perspective, if you will see, they are brilliant. We would probably beat all the industry averages. So yes, now coming from the perspective ki how much of a difference will it make from 30 stores to 50 stores? Not much. We'll add another 20 odd crores or whatever, or 15, 16 crores in our wholesale top line. Whereas the other categories will also start growing. But again, as I said, I am not the one who will come and say that, oh, this year we'll open 50 stores. And then 2 years down the line, I'll come back and say that, oh, we are closing 20 stores out of the 50 stores that we had opened. We want to go steady. I want to take good locations. I really want to do an airport store this year, which should give us very good mileage, not only in terms of visibility, but also in terms of sales. So yes, so we'll keep growing strong, but in fact, it's very good that we have a very distributed sort of a wheel,
Okay, sir, but then the question comes is you're talking about 30-35% growth for many years, 3, 4, 5 years. I don't know, you said 20% may be existing sales and 10-15% maybe will be from the newer brands. So for this 20% online piece, I sort of understand that we have this marketplace, Bagline India and other places, and online will grow and penetration will grow. But in this offline, all these formats, right? Coco, Fofo, distribution, franchise stores, large format stores. If you can give some numbers that how dealer distribution network is growing or large format store penetration is growing, that I can get some confidence that 20% growth will come on the existing brands.
Yeah. So, आज तो हम कहीं ही नहीं रुपेश जी. मतलब, to be very honest, we are very underpenetrated. Only 30 stores, sir. VIP had, I think, 500 stores. Samsonite had at one point of time again close to 400, 500 stores. तो मैं तो बहुत under penetrated हूँ. So तो बहुत है. We will keep growing मतलब that whole pie. और ये growth सिर्फ EBO में ही नहीं है. Distribution. So we today have about 8 master distributors, and in totality, putting all the distributors in place, 22 distributors. I can go up to 35, 40 distributors easily. A lot of market penetration is still pending. South is still almost a virgin territory. Coming to the large format stores, we are a preferred partner with them. Shoppers is growing, lifestyle is growing, Reliance has now taken up Central, they are continuing to grow. So as and when they are growing, our stores with them are increasing. So growth तो तीनों चारों हर जगह है सर.
So ये अगर आप थोड़ा formalize कर सकते हैं सर for consumption of investors की इतना opportunity है, and then every year इतना grow करेंगे dealer distribution में, इतना grow करेंगे large format store में, that will be very helpful to track that, because that is kind of like a leading indicator. And then my final question, sir, is साल working capital में amazing improvement हुआ. If macro trends hold and competition doesn't go crazy, I hope this kind of working capital cycle will continue or improve upon. Can I assume that?
Yes. मैं ये तो पहले भी मैंने बोला था सर कि we are very, very prudent. See, give and take a few things here and there, but more or less we're gonna be on this track.
So the improvement is quite marked, sir. That is why I'm asking. मतलब अगर historical 5 साल का data देखे तो FY23 में जो working capital में और cash flow generation में improvement हुआ है, that is very significant. And can I assume now that this is the baseline?
Don't penalize me for a good performance, no, Rupesh.
Okay.
Okay. Yes,
yeah, thank you.
We will be prudent, and you will. I'm not a Marwadi by caste, but I've become one. So, funny log hai sir.
I got my answer, sir. Yeah. Thank you so much for answering all the questions, sir, and best of luck. Yeah.
Thanks.
Yeah.
Thanks, Rupesh. Due to restriction of time, we take the last question from Nesa. Nesa, you can unmute and ask your question.
Yeah, thanks. Hi, Abhinav. Hope you're doing well, and your amazing journey in the last 6-12 months. So congratulations on that. Couple of questions. So one is, can you just talk about the mix between segments now you have between your travel gear, small leather, and backpack, women's, etc. And with the new brands over the next 2 years, how should this change?
Sorry, you said. Sorry, there was a little this thing in the.
Sorry, I was asking for the mix of between segments. So between travel gear, small leather goods.
The sales mix, right?
Yeah.
So if you'll see, मैंने ये अभी थोड़े समय पहले भी बताया था, which was SLG for us is our largest, and it has done about 46% is SLG. Let me just refer to the exact numbers. Yeah, so about 46% is SLG, 43% is travel gear, and if I talk about women wallets and handbags, women handbags and accessories as a category, it's about 11%.
Got it. And sir, how do you see this changing, say, next year? with the new brands you have, with the focus on bag line and all that?
So, travel gear is definitely gonna increase, is what I feel. Followed by women handbags. Agar aap dekhoge to we don't have any formidable brand till now over there. And Benetton and Aeropostale, in both the brands, we have taken women handbags as a category for us. So that is gonna get a boost. We're gonna see that percentage rising. So net, if you'll see over a long period, if you ask me, I see travel gear being anywhere between 40 to 50%. Small leather goods coming down to about almost 30-35%, and the balance being contributed by the women handbags category. That would be the mix probably, going forward 3-4 years down the line. That's the kind of mix that we would probably be seeing.
Got it. And sir, yes. And sir, are you planning to get up any woman focused brands only? Is that?
Yes, there are a couple of brands which are in touch with us. There is a brand which I'm actually finding it quite exciting as well. So we are in touch. We are contemplating, should we bring that? It's a good brand. It's a beautiful brand. So internal discussions are on. We're trying to evaluate. See, as I said, this is the most difficult part. I've always said, we take time. The brand has to have all the ticks in place. We don't take it. Otherwise, I get brand proposals almost every week. हर हफ्ते हमारे पास 1-2 brand के proposals आते हैं. But I don't want to just go signing brands left, right, and center. For us, it has always been more no's than yeses. So hence we want to be very, very sure of which brands that we choose. So it's a beautiful brand, exciting brand. Let's see if the overall team, all of us feel they agree to our price positioning in the market. All that happens, then probably we might look at it. It is a women-centric brand.
Got it. And, in terms of the new brands that you have, TH, obviously their own stores contribute significantly. So
No, sir, just 10% of our overall sales.
Okay. So for the new brands, it'll be the similar format where in their stores also we'll get space and all that?
Yes. We will.
And for the LFS, sir, you mentioned that, can you give a sense of how many shoppers and lifestyle stores you are in today?
I think barring their tail 10 stores, so shoppers, we are there in about 80-85 stores, or more than that probably. No, 80-85 stores. Lifestyle, we are there in about almost close to 65-70 stores. So barring that bottom 10 stores, see, we are the market leader over there. So we are there. This is with the SLG, with small leather goods. Travel gear, yes, the store count is lower. So travel gear in Shoppers Stop, we are roughly about 35-40 odd stores. So yes, we have a potential of growing further. Lifestyle, we just have 1 or 2 stores in travel gear. So this year there is a major push that is going to come on lifestyle from travel gear perspective.
And for the other brands that we have, can we just put, if we want to do a UCB, can we just put it in these 80 stores, or for that you need to do a separate?
No, you do a separate agreement and all of that, but we've already initiated the talks, and thankfully, our partners, all these large format stores have shown a lot of confidence, and we would be entering Shoppers, Lifestyle, Centro, all these guys with UCB.
So basically this year UCB Aeropostale will come across these, and even travel gear should increase in more stores, right?
Yes.
Okay, sir, last 2 questions on receivables. Obviously you've made great improvement. Can you just give a sense of how much of your billing is direct secondary versus you do the primary wholesale billing? So except for D&D and FOFO, is around 20-22%. Do you do any other billing which is at a wholesale primary level, or it's all end retail?
No, it's all primary, sir.
Even at LFS level, we do primary.
Yeah. We bill to shoppers, we bill to lifestyle. So it's all at the primary level. In fact, hence I always quote two figures, which is one is the turnover that we obviously we report, but we are a wholesale heavy model, and hence at retail you just multiply this by 2 and you will understand that okay, that's the size of the consumer business that we've been able to build. So this year we've crossed 325 crores.
So that's your end retail sales.
That's my end retail sales.
Even online, it's all primary, is it? Except for maybe marketplace.
Except for the marketplace, everything is primary.
So is this, are you trying to shift at least LFS or something to secondary, or that's not possible? Or that's primary is the better route for you?
No, primary is a better route over there. Shifting to secondary might not be a very good idea in LFS. But yes, what we've decided is that going forward, all the top locations, so if it is an A+ location, in terms of EBOs, we're gonna be now opening COCOs, because we're seeing a fantastic return on investment. In fact, last year we opened Quest Kolkata. That store gave us the entire investment back in like 7 months.
Wow.
So all the top locations, A+ locations, we're gonna invest into our own stores. We're gonna open COCOs. Tier 2, Tier 3, all of this, we're gonna take more of a franchisee route where the local franchisee comes in handy to operate the store. So one, you'll have certain direct billings coming from as and when we open these stores. Marketplace, we continue to grow, and hence you'll have a direct billing over there as well. These segments are not only, see, one thing is capturing the turnover. I'm not in the game to capture turnover for any particular means. As I said, I'm more concerned about आपको primary billing से करो, secondary billing से करो. What we track is that okay, this year we've done 325 crores at the retail level, right?
Yeah.
And so 325 crore worth of products have gone to the end consumer, right? And what is the bottom line contribution that you are making out of them? But certain areas give you a certain channels give you a better control over the market. So, for example, the A+ locations. Now, if I'm getting a location in Select City Walk, Saket in Delhi, I will do a COCO, right? Because that's a flagship store. Similarly, marketplace. Today, Myntra, Amazon, everybody has a particular mindset. They're operating in a particular way. They're burning money. They're doing all of that. Tomorrow, you don't know. They're coming up with an IPO. They start saying, no, we will not discount.
Yeah.
You don't know. So marketplace gives me the control where I am in the driving seat. I am in the control. I am speaking to my end consumer directly. You are just a via medium,
Yeah.
So,
but so the channel margin of 50% in this, isn't that high?
So 50% when I say it includes GST. So GST in our case is 18%.
But still, even 32% isn't that high. Shouldn't it be closer to like 20-25%? Like at least all.
Oh, I would love that, Nisa. In fact, if you could accompany me in one of these meetings, I love it. Yeah. With the new handbags and all, these guys are asking 38%, 36%.
Because apparel is closer to 20-25. That is my answer.
Gone are the days.
Achha, okay. And so last question on the manufacturing side. So what is the capex and like what percentage will we do in-house, and the reverse merger that you spoke about, like what entity is that of the promoter?
That entity is IFF Overseas. Currently, if you see brand concepts would be about, so last year, I think they closed at about 46-47 crores, and out of which 8 to 9 crores was supplies to brand concepts. So which is roughly about 20%. 80% is still, Samsonite, Safari, all these brands. Even with the merger, I believe that not immediately, but 2 years down the line, I see that 50% might be with us. We will occupy 50% of their capacity. 50% will still continue to be contract manufacturing for other brands.
Okay. And sir, for our own manufacturing plant, capex and capacity.
The capex for the hard luggage is gonna come, including everything. If I talk about, it's gonna come to somewhere close to 15 to 17 crores. Is the capex, and not including land, because land is bigger, where we'll also set up soft luggage eventually. So, but yeah, hard luggage, if I may say, and it'll require about 4 odd crores or 4 to 5 crores of working capital. So it's about a 20 odd crore project.
Got it. And we will manufacture what percentage between our company and this plant? What percentage we'll ourselves manufacture then?
See, if we are able to occupy 100%, we would love to do that. But I doubt immediately we'll be able to do that. But I'm sensing a huge opportunity when we travel internationally, when we go and meet a lot of these brands and licensing guys and travel partners abroad, and we see that there is a huge shift happening from China, and brands are very, very open looking at India as their manufacturing, sourcing, this thing. So we would love to cater to that. So I would give it again a 50-50 mix, Nisar, where 50% we would do in-house, and I would love to build a 50% sort of contract manufacturing over there.
Got it, sir. Thank you so much, and all the best.
Perfect. Thank you, Nisar.
Thanks, Nisar. That was the last question for the day. And thank you to the management for giving us so much time. And thank you to all the participants for being there on the call.
Perfect. All right. Thanks everyone for listening to me patiently.
Thank you.
Thanks. Bye. Bye-bye.